Hey guys, welcome back to John Hart channel. We're gonna talk about the stock and option. And if you are new, welcome. My name is John, and I do record this weekly video for you, for me, basically, kind of record my journey on the stock and option, and hopefully also for you guys to learn and kind of jump along with me, kind of asking question if you guys have any, and learning the strategy that I use. So this week, or maybe not this week, maybe in the past kind of 2 months, I've been buying short oil by using inverse ETF USO, which is SEO. SCO, Sierra Charlie Oscar. I start this journey back buying in May, kind of the end of the May after that Memorial Day. It wasn't really doing much well, to be honest with you. It's kind of against me because the oil it kept rising grindingly, and somehow I gotta have to figure out, hey, what if I am keep buying, average down, but in the other side, I'm also defending my position, right? Just in case if oil start going down, which is I am expecting to, because the market, it just keep going so much higher without any good foundation on the whole economy, right? Because COVID-19. Oh, by the way, this recording, it's recorded on 9 September 19. So market already closed. This is on Saturday. I had a video yesterday, but I decided not to post it because it wasn't that great. But I decided to create this one. I think this one will have a better idea for you guys to kind of learn how to defend yourself if your stock position or any position against you, and how you basically work on it so you don't lose a lot of money, and also working on it, getting it profitable at the end of the trade, which is what I want to show you. So this SEO, it's losing money at first, right? As I'm buying more, and then as the market turns, especially oil, I am basically reaping that gain. So that's what I want to show you guys, and I'm hoping you guys are learning from this. This strategy is called cover call, okay? Cover call with average buying, okay? All right, so without further ado, I'm gonna share my screen, and then you guys can see the screenshot that I have. I pulled from my SEO screen here, and I'm gonna make it bigger for you. So I start buying SEO long because I do expect this to bounce as the market, moving, probably moving down, but it apparently did not happen. So I'm going to show you the whole USO here first. So USO was this level when I start buying. Okay, that was back in kind of the end of May, right? And apparently it pulled back, and it just kept going higher. I was expecting this to pull back because I'm thinking, hey, maybe the market will not do a fee recovery. Nobody knows what's gonna happen, but apparently it just did a V recovery, right? And the oil just kept grinding higher sideways, which is, I'm just like, well, that is, not looking good. But like I mentioned earlier, just like, hey, gotta think what kind of strategy, what kind of vehicle that I can use to defend myself. And when the market pull back, that's where I'm reaping my gain. And as I'm looking at this, day by day, I mean, you're not gonna see this as 2 months period, right? You're just gonna look day by day. And as you see here, market pullback, I'm excited, and then keep going higher again. Now, there's also a gap fill here, which is I was looking at this. And I know when I'm looking at this, the market is overbought, especially ES and Q. Those been like grinding higher crazy, right? So going back, I'm going to show you my screenshot here. All right, my numbers. This is what I have. It's recorded back from, oh, June 4, okay? So 25, 65, 500 share, 700, 800, 300, 200, 500 at the end is like the August. That's the latest I bought because it was 1472, and then that's the bottom. And then we've been sideways at $16 roughly, 15 to $16. You can see the chart. Now I sold everything at $19 because that was the bounce, okay? So let's take a look here again. That was the bounce of the market. As you can see, we gap, and then we have this. I was expecting more to 20, exactly at 20. It did hit it at after hours. It hit $20 because the oil future basically went down and then suddenly false break and then it went up again. Now I sold these because I'm thinking, you know what? I think this is gap right here and this move it's overbought. So I need to take position, at least cutting some position, which is I'm trimming that position. So I'm trimming it by 1,000. So total I have 3,000 share. I'm trimming it at 1,000 at 1925, and then after that it went down to 1890 something, and then I sold another 1,000, and then I sold another 1,000. Now the other key that I mentioned, okay, this is the cover call. Every time I bought, every time the position against me, okay, I'm gonna go back um, to this Excel spreadsheet, right? Every time it's against me, I'm selling an option call. So let's say I have 500 share of SEO, right? At 25.65. And I saw the stock basically did not move going up as I expected. So I'm selling the call option and collecting that premium, okay? If you guys new with option, this is called a cover call strategy, and I need you guys to Google it. I'm not gonna talk so much detail on it. Um, Cover call strategy, basically you own a share, but you're selling a higher option strike on certain day expiration, and you are collecting that premium. So in this case, okay, 6-4 for SEO, 5 contract. Remember, 1 contract equal 100 share. So I have 500 share. So I'm selling 5 contract. I'm thinking to sell it at 27 call expired, within that 2 weeks period. Okay. And it's giving me about 30 cents per contract. So I'm collecting $150. Now, of course, if SEO going up to 27, my stock share is making money, right? From 25.65 to 27. So that's about $1.35. So that's roughly about $650 if, okay, we're talking an if. Then if the stock doesn't go to above 27.30, which is 27.30 because I'm collecting 30 cents, the break even is 27.30 at the expiration. If it doesn't go beyond 27, then I'm collecting 150 plus the 650 from the share itself. That's kind of the basic foundation of the cover call. Now, in this case, right, the stock did not go up to 27, nor even 26, nor even 25.65, but the stock kept going higher, as you can see on the chart, okay? Now I'm gonna go back here on 6-4, okay? So we are here. So 6-4, I'm looking at the stock, hey, I want this to go up, but it did not go up. So I'm selling it here at 27, which is the last resistance, right? If that basically we're able to bounce, and I'm making, roughly about $900, which is good. That's kind of the goal, but it did not. And then it pulled back the next day, which is already kind of hedge it. Now, in that case, it's not really doing much. And you can see there's also a trend line down, trend line here. So market just like kind of sideways. So in that case, I'm collecting $150 free and clear because it never go up to 27. Okay, so that's $150. And the same thing, the strategy is the same. So the market just keep up, down, up, down, up, down, but it keep plummet. From 25, keep going down to $14.72, which is in my head is just like, damn, I'm wrong, you know, I'm wrong. So keep in mind, if you're wrong, you have two options. Either you cut loss or you're thinking the other way around, which is how you defend yourself and make it work. Use the vehicle. Okay, with stock, you are not just stuck in one, you know, vehicle. There's so many tool in the toolbox, right? So you got to use the tools that is given to you. So I'm mixing between stock and option because that is kind of my specialty and I like it. I can do cover call, I can do butterfly, I can sell put and own more shares. So there's a lot of stuff that I do. And if you are new, look at my other videos so you guys can learn. There's so many tools in the toolbox that you can choose, pick and choose. So at the end, you're defending yourself from losing a big money if you're wrong, or you can cut loss and just realize and move on. In this case, I'm not giving up. I'm fighting and I'm getting the good result from here. So anyway, as the stock going down, okay, basic resistance and support, okay, that's my kind of my technique. As it's going down and I know that it's not going up, the market just keep moving higher as a V recovery, right? I mentioned that. Then I know for sure that, you know what, I'm gonna buy more. I'm gonna keep using this strategy and I'm gonna selling call option. As you can see on this right column, okay, this is the position, how many contract, what is the strike, what is the premium that I'm collecting. 150, 360, 1500. As you know, as my share is getting bigger, I'm selling bigger contract as well. This one as well. A 1060, 275, and then 300. That the last that I hedged, and I was wrong because as the market pulled back, right, the oil pulled back, then my option 18 got breached because remember we went to 1950-ish, right? So I'm losing about $1.50, but I do have about 2 weeks play. So as I'm seeing the market, hey, oil has been oversold, I know it's gonna bounce, then that means the SEO value will go down as I'm selling that. And we did. We closed at $16 at SEO. So the problem with this is this week, right? This week, Tuesday and Wednesday, this is the expiration. The expiration is 9/18 for SEO that I hatch. The problem with that is I do not want to take the risk what happened because fat FOMC minutes is coming out and also the oil was oversold. As you can see this, okay, I'm gonna make it closer here. As you can see this SEO move, we are going sideways and then the FOMC came out here, right? Nothing happened and then it just keep plummeting, right? This is the invert. Remember, this is the SEO, which is the bearish oil. Now, if you look at USO in this particular, it's getting oversold. Then it start bouncing higher. That's where I decide to hold my SEO call, hedge call, until it basically going down to 25 cents and then I cover that right away or buy back, right? But the stock, I sold it at the day when the oil bring down to the oversold territory right here, which is the SEO. If you look at this is the day when I sold the stock. So of course there's a margin. I'm still keeping the 30 contract of hedging. The margin is still there, but I don't want to lose my money. So when I sold this, the roughly estimate is about $2,000. But I know with my hedging, if I let it loose or sold it right away, I'm just making about two grand with the whole 2 months period, right? But I decide, you know what? I know it's oversold. I know I can playing this. I'm hoping SEO will go down to 18 by the time it's expiration or maybe close to the expiration. Then I can reduce that 3,000 loss hedge maybe to something else like $1,000 or maybe to, I don't know, $500 and smaller, so I can recoup more profit. And it did, and which is good. um, from 2000, we basically grew to $5,000 profit, okay, on SEO play alone, which is short oil at that time. So I sold position. I'm basically bullish with oil. I know it bounced, which is that's my expectation. Um, the other thing that I want to show you um, right here in this play from minus 3,000, I basically only lost about 450 on this one, which is good, right? 750 minus 300, that's the premium I collected, but I buy back 750. So I lost 450. But if you look at all this play, they're all making money on this. So we're looking at somewhere around 3,000 just in this play alone, okay? Now in this one, we also making about 2 grand, so roughly about 5 grand. So that's kind of the things that I want to talk to you, okay? I hope you learn from this, and I hope that you looking at option as a strategy where you can hedge or even collecting premium while you're playing a stock. Okay, there's so many options that you can choose on your toolbox. Open your toolbox, looking at, okay, well, the technical chart did not work at that time and it just keep going down. All right, let's find what kind of strategy I can use, okay? That's pretty much I have, and I hope you guys learn. If you new, welcome, and please share this video with your friends, your family, whoever that want to learn about trading. And don't forget to like and subscribe this video. Appreciate it and hope you guys have a great weekend. See you guys. Take care.